Hello and welcome. So in this lecture video, I'll be going over some additional problems for Chapter 2 to test your understanding of the material. So what I'd like you to do is to pause the lecture video and do these problems 114 and 119 on page 39 and 126, 127, 152 on page 40 and also problem number 156 there on page 41. And then we will go over those, and then we'll look at number 159 together, okay? So go ahead and pause the lecture video and give those a try, and then come back and check your work. Thanks. Hello and welcome back. So let's see how you did. So the first one, number 114, the right answer is C. So let's take a look about how you would solve this problem. So basically it says here's all the accounts. Got cash 30,000, accounts receivable 32, accounts payable 20, fees earned 65, rent expense 15,000, insurance 4,800, supplies 5,000, capital 19,800, withdrawals 18,000. They all have normal balances. What's the totals for the trial balance? So I didn't follow the exact format here for the trial balance just because I didn't have enough room. So what I did is I listed all the accounts that would have a normal debit balance over here. So I say debits and I say credits. That's the way I did it. Okay. So how do I know cash has a debit balance? Well, cash is an asset. So it should normally have a debit balance. That's what this is telling you. Accounts receivable is an asset. Should have a normal debit balance. Accounts payable is a liability. It should have a normal credit balance. Fees earned is revenue. This should have a normal credit balance. Rent expense is an expense. It should have a normal debit balance. Insurance expense, 4,800, has a normal debit balance. Supplies, 5,000. Normal debit balance. Capital, owner investment, normal credit balance. Withdrawals, normal debit balance. So then what I did is I added up all the debits, all the accounts that should have a normal debit balance of cash, accounts receivable, rent, insurance, supplies, and withdrawals. I got 104,800. And then I did the same thing with the credits, the accounts payable, fees earned, and capital, 104,800, and then those two balance, and that should be the totals for the trial balance. Okay. Let's look at number 119. A $15 credit to sales was posted as a $150 credit. By what amount is that sales in error? Well, it was supposed to be 15, but it's posted as 150, so it's overstated by $135, the 150 minus the 15. All right. Let's look at 126. All the following are asset accounts except accounts receivable is an asset, buildings are assets, cash is assets, prepaid insurance is an asset. Supplies expense is not an asset. Look at the term, it says expense. Supplies is an expense. But when those supplies are used, it moves from supplies asset to supplies expense. I'm going to say that again, and that's something we'll talk more about in chapter 3. But when those supplies are used, they become a cost of doing business. So they are no longer assets. They move from being an asset to being a cost of doing business and expense. So supplies expense is not an asset. Supplies is an asset, but not supplies expense. All the following are liabilities except accounts payable is a liability. Anything that says payable means liability. Unearned ticket revenue, remember that's when we get paid up front. That is a liability. We have to, in this case, we're putting on a concert. We owe the concert. Unearned ticket revenue. So 152. So then let me go back over here to 127. The right answer is D, commissions earned, because that's revenue. Number 152, a company sends a $1,500 bill to a customer for delivery services rendered. Set up the necessary T accounts and show how this transaction would be recorded. So this sends a bill. So this has been rendered. Delivery services rendered. That means they can recognize the revenue. that means they can recognize the revenue because they performed the service. So even though they have not gotten paid yet, they can still recognize the revenue because of the revenue recognition principle. It doesn't say anything that they got paid, does it? Nope. So this is an accounts receivable. So we have our accounts receivable T account. We would debit accounts receivable because accounts receivable is an asset, so I put that on the left side of the accounts receivable T account. Then I have fees earned as, or I could say delivery services earned. That's fine too. I just said fees earned. Good enough. Fees earned, $1,500. This is a revenue account. Okay. Credit to revenue because we can recognize the revenue because we have rendered delivery services. So then my whole journal entry becomes debit to accounts receivable, credit to delivery fees earned, $1,500. Remember with our journal entries that our debits must equal our credits. Okay, so let's look at the next one. Number 156. It says on February 5th, Textron Source purchased a van that cost $35,000. The firm put down $5,000 cash and then signed a long-term note payable for $30,000, which is the balance. Okay, so they put down $5,000 cash. So we have a couple of things that we need to think about. They purchased a van. Okay? Purchase a van. Where do you think you put van in terms of the accounting equation? It's an asset. So assets, van, is going up by $35,000. So I debit van, okay, for $35,000. And then it says the firm made a down payment of $5,000 cash. Well, I'm paying cash. Cash is an asset. Cash is going down by $5,000. How do I recognize that assets go down? I credit the cash for $5,000. And then I have made a down payment, $5,000 cash, signed a long-term note payable for the balance, which is the 35 minus the 5 of $30,000. Notes payable is a liability. My liabilities are going up. How do I recognize that a liability is going up? It's with a credit. So my full journal entry, debit van, $35,000, credit cash, $5,000, credit notes payable, $30,000. How does this keep the accounting equation in balance? One asset, van, is going up by $35,000. Another asset, cash, is going down by $5,000, and liabilities are going up by $30,000. So assets net are going up by $30,000 because van went up by 30, cash went up 35. I'm sorry, and cash went down by 5, which means it went up net 30. Liabilities increased 30,000, and that's how it keeps the accounting equation in balance. Okay. All right, so I'm going to end this lecture video now, and in the next lecture video, you're going to do this problem. You're going to complete all these journal entries, and then you're also going to go through and do this trial balance. You could use this trial balance to prepare the income statement, statement of owner's equity, and then the balance sheet. Okay. Thanks so much.